Hello and welcome to our June edition of GlobalView. For those of you who are new to Frontier View, we're part of Escuno's geopolitical and market intelligence business unit. At Frontier View, we work as a trusted partner at over 300 multinationals, supporting senior executives such as VPs of region, CFOs, and strategy leads. Our focus is on empowering strategic planning, market monitoring, and international growth. And for that, we have dedicated research practices for North America, Latin America, Europe, Middle East and Africa, Asia Pacific, global economics, and healthcare. We work with clients across consumer goods, healthcare, B2B, and the tech sector. So welcome. Today, I am joined by Kinnari Gurnani, who is a senior analyst for Asia Pacific from our team. And she's a special guest because she's been working on a particularly interesting piece of research that we're about to release. Kinnari, welcome. Thanks for joining GlobalView.
Yeah, thanks, Martina.
The topic of today's conversation is a little bit bigger picture, but also something that we know a lot of companies have been interested in, especially for the past 12 to 18 months. And that's how supply chains are changing, what sort of new investments companies are making in their manufacturing footprint, and how they're dealing with some of the geopolitical and economic disruptions that have taken place over the past few years when they think about new investments that they're looking to make. I have to say, we get this question constantly from clients. A lot of them are trying to assess the structure that they're trying to get to from a footprint perspective, where any new investments should be taking place, how to think about the ROI new investments, especially on the R side of this, from a risk point of view. How do you de-risk your supply chain? And of course, there's a huge complexity on the executional side as well. But we're right in the middle of a pretty intense decision-making process that we can see from our client conversations. And to bring a little bit of hard data to this discussion, we recently ran a global benchmarking survey looking at how companies are restructuring their supply chains globally. And we're happy to share a couple of highlights from the results of the survey with us today. The survey was run in the months of May and June 2023. It covers companies across the spectrum from healthcare, consumer goods, B2B industrials, and tech. And really is serving individuals at the very senior decision-making level within those multinationals, looking at their footprint from a global point of view. So it covers everything from what is happening to your China supply chain all the way to how is the Inflation Reduction Act in the US affecting decision-making, and where are you looking to localize a little bit further. So I'm pleased to have the author of the study with us today, Kinnari. And before we show a couple of results, Kinnari, just talk to us a little bit about the conversation in Asia, because that's an epicenter of a lot of these decisions. What are you hearing from clients and what sort of challenges are they facing there?
Yeah, sure. So absolutely, I have to say almost every single call that we get on with an Asia Pacific executive and the country level leaders within APAC, we get this question on supply chains, specifically around how are companies thinking about their supply chains. I think what you rightly mentioned is this piece is so timely because this comes out almost exactly as in real time as companies are thinking about it. So that's the first thing. The second one is the reason why Asia Pacific is such an epicenter for this question is China belongs to the region. And so there's the big China question, right? Just from a geopolitical perspective, you spoke about the likes of the US, parts of Western Europe. And so you have the geopolitical questions around China, but then also what's likely to happen locally, questions around what does growth look like in China? What does policy decision-making look like in China in the next 5-10 years, etc. So that's point number 2, which is the big China question. And then finally, as a theme, I would say companies are excited about, capitalizing on manufacturing incentives. We've heard so much, from various parts of Asia Pacific, India, parts of Southeast Asia, a select few developed APAC markets as well, the likes of Japan, South Korea, etc., for a whole host of different sectors. So there's also that excitement. They just want to get a little bit of a grip on what does that eventual structure really look like, even if we do end up capitalizing on some of these opportunities. So those are the 3 things, which is what are the companies doing? What is the big China question? And then how can we effectively capitalize on these incentives?
Yeah, thanks, Kinnari. So let's take a look at a little bit of the data then. First, we asked companies about their biggest concerns on supply chains. And this is kind of taking it a little bit out of the geographic question and trying to think more structurally about the changes that are taking place. And I think what's interesting is that there is acknowledgement that when you have a more de-risked global supply chain, when you have more buffers, when you have more optionality to avoid disruption, it also comes at a higher cost. And you can see in the results here that companies are somewhat concerned that supply chains will be more expensive to run, more complex to manage. Obviously, complexity also can lead to increased costs. And those are factors that really raise questions about how do you pass that, to whom do you pass that cost? How do you pass it on to end customers potentially? And lead us to believe that actually these big supply chain changes that are happening are inflationary, which is interesting from a long-term perspective, and potentially put more pressure on companies to focus on higher margin products or do new product innovation where they can get a better pricing upfront for new products. So actually, these supply chain feeds back into strategy in ways that are very interesting at this point in time. And then you can also see that, yes, there's a lot of concern about localization pressures, especially for sensitive industries or industries where supply chain concentration is kind of the only way to run it, whether it's because of unique talent you need or extremely specialized or very capital intensive investments, where you can't just make 5 factories, you actually really can only do it in 1 or 2 places. Those incentives are really becoming punitive in effect, and it's causing a lot of strategic challenges for companies. So these are just a couple of highlights in terms of where supply chains are headed going forward. Now, Kinnari, there's been a lot of discussion in the media about friendshoring, and we wanted to test that out a little bit to see are people doing it and do they even know what it means? Tell us a little bit about your observations from this question.
Yeah, absolutely. Friendshoring is the big buzzword we've all been hearing about. Though, you know, I think, like you mentioned, it is interesting that companies are acutely aware of the fact that building in more buffers may not even be a sustainable strategy from a cost perspective, from an efficiency perspective. But then, of course, here, a majority by a mile really said that regionalization of supply chains is really the most likely strategy that they see moving forward in the next 5 years or so. You talked about friendshoring. 1/3 of the respondents talked about friendshoring. Here we made it a little clear about what we meant, but there are a few caveats here as well, right? So concentrate in the definition that we use, it means concentration of supply chains in North America and Europe, or essentially North America's closest allies. But there itself, you know, we're looking at a certain degree of competition, which is, you know, you have certain incentives that are coming out of North America, you know, parts of Europe not too happy about that. And so you do have some element of competition even within this broader umbrella term of friendshoring. So definitely something to tease out here. But those two were really the ones that came up as the largest or most likely strategies that companies said that they were going to implement.
Yeah, and I would also add that the China +1 or China plus, our suspicion is the reason why they're ranking here so low is actually because they've already been implemented. Even leading up to the pandemic, a lot of companies were doubling down on their investments into China for China manufacturing, which is your China plus strategy. And then once you start regionalizing away from China, you might essentially be moving into the regionalization supply chain. So these are just some things that we hear from clients, and it's helpful to put a little bit of data behind what do they mean and exactly how would they describe their approach. And then one more question that we wanted to highlight is about the where. So if you are regionalizing your supply chains and diversifying them, then what are you looking at? And we wanted to understand both countries about which decisions have already been made, and also what else are companies looking at, because we know some of these are under investigation today as we speak. And so you can see that there's definitely a wide distribution of countries that companies are looking at, and at the same time, very interesting trends in terms of where some of the alternative locations are coming from. Kinnari, you are getting tons of questions on India. Can you just comment a little bit on that, because it's such a hot topic right now?
Yeah, sounds good. So again, in the survey, we definitely did see India clubbed along with the US, Mexico, and Brazil, which were essentially the top four, where companies were more or less certain that they either, investments from a manufacturing perspective were either already underway or were almost certain to happen. So certainly those were the top ones. You asked about India, again, like we were talking about from an incentive perspective, etc. Growth rates, all of those things, companies are really increasingly looking at the market. So it's certainly up there, and even, even from a survey respondent perspective, the data corroborates what we've been hearing. The ones under evaluation were interesting as well, I would say. So of course, there are other parts of the world, and certainly even within Asia Pacific, where countries were under evaluation. We have the likes of Vietnam, again, which we've heard come up a lot. And so not too much in the green, so in a confirmed yes as a percentage of the respondents in the survey, but certainly a substantial chunk under evaluation. So it does look like Vietnam is among the top here, even from an under evaluation perspective. We have somewhat of an equal distribution here across Southeast Asia. And then the likes of South Africa and Turkey, as well as Poland, are, a handful of them also talked about those markets as under evaluation. So like you said, a broad-based distribution here. There were some companies that talked about Singapore, Japan, Colombia. Those were other names that were thrown out as well. But a substantial chunk does seem to be concentrated in those first four markets on the left-hand side, parts of North America, LATAM, and India.
Sounds great. Thank you so much, Kinnari. Now, I hate to cut it short, but we are out of time for today's conversation. Please reach out to us if you're interested in learning more about the survey, the results, and some of the context that we can bring into these discussions. Thank you, Kinnari, for joining us today. Really appreciate your insights, and looking forward to speaking with you next month on GlobalView.
Thank you.